This whole movement was a fake movement to induce sellers into the market. Hello guys, welcome back to my channel, and today I want to go over these trades, how I caught them from start to finish, so you can understand the way I'm trading. This is the first model, and also in this video we'll be going over a second model, which is these trades. The second model is based on market execution. This trade is from Friday. By the way, I sent all my trades into Discord, and if you want to take my trades like this guy, he paid to join my Discord, do the trade, made the money back. Okay, so he made the investment back, and he also made another $300 in profit. So if you want to join my Discord, take my trades, and make money every single month like I do, is the first link in the description. And now let's go for these trades right here. So if you've been following me on Instagram or watching my videos on YouTube, you understand that I like to keep my trading as simple as possible. I do not look for some crazy things, but as I said, I want to keep it simple, mechanical, and rule-based. Okay, if something is mechanical and rule-based, that is happening over and over again, it means it's repeatable. We can make money every single month just by understanding the simple model. And basically, if you look at this price action on the left, we had sweep of high. Okay, so we had this high, we swept it with this high right next to it. Then we broke below this level. Okay, so we had nice aggressive close. Once we have the nice aggressive close, people will now have the ICT model. Okay, so we had liquidity sweep, market shift with aggression, aka displacement. So I'll do the exact opposite. So once everyone is looking to sell from these levels, I'm just gonna buy and continue the trend. I have specific way to enter these trades that I only teach in my Discord, but you can basically just wait for 50% of the range, which would be, for example, this one. So we had this last push. This will be, for example, the 50%. Once we're going to close above the 50%, then you can enter on some kind of pullback and continue higher. But as I said, I have specific rules that I need to see. So we entered a bit higher, but this trade super clean. Okay, it was basically this whole model. Same thing on the left. We had this buy side sweep like this. This would be the manipulation, but in reality, this is not manipulation, this is the manipulation. Okay, so this movement to downside is the manipulation, as we can see right here. This whole movement was a fake movement to induce sellers into the market. And once we have sellers, and then we can look for buys. Market is fractal. It means that every single time frame is the same. So we had market shift in this level, and then we can find the closest order block, supply, demand, FVG, and then we can look for the same thing on a low time frame. So this small movement to the downside is actually the same model on a low time frame. Okay, so we had this market shift, same thing on the left. Okay, so if I go, for example, to this level, find some type of candle that was manipulated. Okay, so let's go to 30 minutes, for example, and this candle was manipulation candle. Okay, we can see that the candle opened, swept the previous candle's low, which would be, for example, this one, and then continued higher. Okay, so this was the manipulation candle from this order block. Okay, this would be classified as order block. We set the high on left, we broke the low with momentum. So if I go to low time frame, let's go, for example, to like 3 minutes or 1 minute. On 1 minute, as you can see, we tap into level. This would be classified as order block. We swept the high on left. We broke this low with aggression. So a lot of people will be looking for confirmation. So confirmation number one would be this one. If we have some type of people who try to sell from these levels. Okay, so trap number one. Then we had this trap number two. Every time we took out these lows, we're just going to continue higher. And that's exactly what I'm looking for. So as I said, some type of sweep like this. Then market shift. Okay, so now this whole level we considered as trap level. This high will most likely become inducement and market will continue higher. So once we're gonna break and close above 50% of this whole range, okay, so this is last sell before the buy. Okay, so for example 50% like this. Okay, so once we're gonna close above the 50%, then you can choose the closest level or some type of POI. Okay, it can be some type of Fibonacci level, it can be whatever you want to use, but make sure you have precise POI. Okay, so entry point like this. SL, I'm not going to say why, but I put my entry point and stop loss based on Fibonacci levels, because Fibonacci is one of the best tools in trading. Okay, so entry point right after we close above the 50% and target minimally 1 to 2. Okay, usually price will tap the 1 to 2 and then continue much higher. Once the price hits the 1 to 2, then I'm going to put my stop loss into the take profit level. And we have two scenarios. Okay, first scenario would be price going lower, stopping you out at take profit, or price will do small pullback and continue much higher, and then you can trail the stop loss. If you don't know how to trail the stop loss, you can check out my previous videos. But basically, instead of 1 to 2, now you would have like 1 to 5 if the market is volatile. If you're trading gold, GM40, S100, US30, these pairs usually move without some type of a huge pullback. Okay, so you can trail stop loss, and instead of like 2%, you can now make like 8 or 10% per one trade. Okay, super simple. Hopefully everything makes sense. And when it comes to the second model on GM40, before we go on the second model, let's go with this trade. So we swept this high on the left. Then we had this market shift. We broke aggressively below this low. And then we closed, for example, above the 50% around this level. I use only one time frame for the entry model, so I would not be using 5 minutes, but the entry point was around this level. And the same thing, just stop loss below the specific Fibonacci level and target 1 to 2. Once the 1 to 2 is hit, then just trail the stop loss. And instead of 1 to 2, now you can have like 1 to 3 almost. Okay, super simple. And let's go over the second model, which was on GM40. By the way, on Tuesday, the first week of September, we had multiple trades with the second model. By the way, the second model is made for prop firms. Okay, so if you want to pass the prop firm as fast as possible, the second model is made for that. So, for example, Tuesday, the 2nd, just from the second model on GM40, S100, and US30, there was over 10% profits with the second model. So if you took all the trades from the second model, you would pass the prop firm in 1 day. It all depends on the price action. If the price action is clean, you can pass it super quickly. Okay, so the second model, as I said, it's not based on limits, but it's based on market execution. So every time I see some type of close, I'm not going to say the time frame. So for example, let's go to 15 minute or the 1H, doesn't matter. If I see the candles close below specific moving average on the specific time frame, I'm just going to market execute. So for example, we have some type of moving average like this. I see 5-minute candle closes below the moving average. I'm just going to market execute. And usually the price will create small pullback and continue much lower. So the second model is super simple to understand. We have trades almost every single day. Also sent it into Discord. So hopefully you will learn something today. Okay, so this is the S100. This is the first model. Both of these models are super simple. And by the way, these are just entry models. And entry model is easy, but you gotta understand where the market is going. And if you cannot understand the POIs, where the market is actually going, the liquidity points and stuff like that, the entry model is useless. Because, for example, around this level, so we swept the high, then we broke below this level, then we closed above the 50%, for example. Then this would be stop loss. Because this is not the way you want to use the entry model. First of all, you need to understand where the market is actually going, and then you can just join the direction. So if I understand that the market is going higher, now this is just super simple. I'm just going to wait for price, give me my entry model, I'm going to enter, and that's it. Super simple. Okay, so if you got any questions, you can just DM me on Instagram or leave a comment below, and see you next time.